Welcome to Property Addicts Australia, your home for everything property investing. Get an insider's view of what really works when building a portfolio. Learn how to avoid the common mistakes, plus get all the tips and tricks from the property investing experts Sana and Mona Ali. Join us to learn from the experts and set yourself up for long-term success in property investing. Proudly powered by propertytwins.com.au.
Welcome to another episode of Property Addicts Australia podcast. Today, again, we have John Comino, CEO of Bridge to Bricks Buyers Agents. Welcome, John. Thank you for joining us today.
Thanks for having me back.
So, in today's episode, we want to really focus on Sydney market as a whole, compare it with rest of Australia, other capital cities, regional versus capital city property. So starting with Sydney, obviously you've been buying in Sydney for a long time. So could you please shed light on on different parts of Sydney in terms of affordability and what we're looking at, as we know, Sydney is expensive.
It is expensive, and it's sort of divided, I guess, in quarters, the north, south, the east and the west. And the expensive areas are generally the eastern suburbs is sort of the primary area. I always say that the eastern suburbs is where like the Arnott's family will go to live, the Hines family, if they were Australian. That's where the kind of the generational wealth is. You got the North Shore, which is another great area, but it's where the newer wealth is. And then you've got the western suburbs and the southern suburbs as well, and makes this lovely tapestry. I mean, I generally think that the northern beaches will probably in my lifetime overtake the North Shore as that second most expensive part of Sydney. But at the moment, it does have a bit of an industrial edge in some parts. But I think that the northern beaches is on the rise. But we can talk about areas of Sydney that are interesting.
So what attracts people to North Shore or northern beaches or eastern suburbs or even Sutherland Shire, I would say?
I would say it's a good question. I mean, I think it's culture, to be honest. I think it's culture / stage of life. Like a lot of single couples come to me or couples expecting the first child, they come and they want to live in the inner west. And I think that, people come to the North Shore looking for schools and it's all the different, I think that, the eastern suburbs is interesting where you've got a lot of like family generational wealth, but their kids can't necessarily afford to live there. So they're looking into either the kind of inner west or some of the southern beaches areas. So there's all these kind of markets within markets, and they spill over into neighbouring suburbs, and there's all that ripple effect that happens.
So obviously there's a bit of a divide, right? East versus the west and so on and so forth. Have you seen things change over the years, over the last 20 years that you've been investing in property and also the last 7 to 8 years that you've been running your business? Has there been gentrification or changing attitudes given Sydney is expensive?
Yes, I think that there's been all of those dynamics. I think that the biggest factor in the last sort of 7 or 8 years that I've been doing this has been infrastructure. So the metros going in have given us a very specific like corridor where you can do your investing. That plus the announcement of Badgerys Creek. So the kind of the last not even 10 years, I think, has been dominated by where's the government money going, where's the infrastructure going. One of the hottest spots for me recently has been they're finishing up the metro from Sydenham out to Bankstown, and that area is just doing really, really well. I've got clients coming to me looking for apartments in Wiley Park. I bought a ton of them last year, which is super strange. That's not something that you would normally expect people to be knocking at your door for help with. So that corridor, then you've got the other corridor that goes out to Parramatta through Drummoyne and Five Dock, and that's becoming quite popular now as well. But gentrification, I don't think gentrification is a given. I think certain conditions need to be met for gentrification to happen. So if you think of like Balmain, cafes turned up, population grew, family sizes started to shrink, that sort of thing. So So I don't think every area gentrifies, because I think that I don't necessarily think that family sizes will shrink in southwest of Sydney. I think families need to live somewhere. It'll grow in other ways, but it won't grow through gentrification. Which is hard to say.
Curious, you mentioned you bought a lot in Wiley Park in recent times. So do you see something happening there apart from the metro?
Yes, it's a cracking area for investors. I think it's great. So there's another reason, and that is speculation around rezoning. There was a government report that was leaked, maybe deliberately, but certainly accidentally, that named a couple of suburbs that were earmarked for rezoning. They mentioned Crow's Nest, they mentioned other places, but they mentioned Wiley Park as well. And I think that they're going to uplift the station and the area around the station. And the question is, well, what next?
So do you see developers knocking on the doors of even small old red brick units and say, hey, can you sell us your property?
Well, I expect both to happen. I expect both to happen. I think that there's a lot of there was a speculation around rezonings across all of the Bankstown LGA a couple of years ago. That was parked, but it may come back to life where these sort of bubble areas around the station all become R4 and
so higher density or high rise buildings effectively.
Correct.
So the old brick apartments might be replaced by these high rises.
Correct. And I think the old red bricks, they might start to disappear and be replaced with higher buildings. It's not necessarily great for the area, but it's good for the owners of the land at this point in time.
Absolutely. So if you're in a block of units, or 6 or 7 or 8, 10 units, then you could just join forces with your neighbours and sell at a good premium.
Correct. It's a very dangerous strategy to wait for that because it may never happen.
Yeah.
But I think as a general statement, in these areas are going to benefit from that in general.
But do you see cafes popping up in Wiley Park or Lakemba?
You see them. You actually see it in Punchbowl. You see there's certainly a vibrancy there, and it's there's definitely a lot happening there. Yeah.
I don't know if a hotspot would be a fair word for this, but where else do you see value in Sydney for your clients?
Well, I think generally speaking, your decision should be driven by scarcity, and scarcity is Bondi Beach and Coogee Beach and Mossman, and so I think that there's a reason why over long periods of time the better areas will prevail because they have scarcity. The Mossman can't sprawl, for example, whereas parts of Western Sydney can sprawl, and so that will always mean that I think that there should be ultimately a preference for premium areas because I think that they will do better over long periods of time. That said, Bankstown, Hurstville, like these are areas that are right in the smack bang middle of Sydney, and they're getting tons of investment. So if the question is what areas do I like, I think that the sort of most interesting area right now over the next 10 years is going to be the Southwest Corridor, which I mentioned Bankstown before, which I still like those surrounding areas, but out to Campbelltown even. So Liverpool, I think these areas are very development friendly, and I think that they are connected to all the big infrastructure projects that are going in, namely Badgerys Creek. So if I was going to play Badgerys Creek, I would just buy like a corner block in Liverpool, and that's how I would do that.
Why a corner block?
Because corner blocks give you more control. Like if you're a developer, the corner block is the most strategic part of that land because you get the dual access points.
So you refer to Badgerys Creek. So the airport is nearing completion. I think they're going to open in 2026. The Western Sydney, Western Sydney International.
It's looking pretty good.
Yeah,
right. Okay.
If you look at their Instagram, it looks like a real airport now. So wouldn't the growth already be priced in some of these pockets because the airport has been a long time coming? Or could people expect more growth to come from that?
It's a good question. I don't think the market's that efficient that it prices fully prices in infrastructure before it arrives. I think that there's a little bit like certainly some people went in early and they've made a lot of money and they'll continue to make money. But I actually don't think infrastructure is a funny thing. Like the benefit of the train. Of a train line exists when the train opens. The year before, it's mostly inconvenience. So I think that it's partially baked in, but I think when this infrastructure goes live, that's when it gets another spurt.
So I know you like Southwest, but what about Western Sydney, the greater Western Sydney?
Yeah, I generally like it. I mean, I think then you're looking at LGAs. Like I bought a lot in like that Seven Hills area, that not in Blacktown, but in that LGA. So Seven Hills over the last couple of years has done very, very well, but it's not very development friendly. And I think there's sort of a handbrake in that area. So other parts of Western Sydney, I think, are quite positive as well, a lot more developer friendly, and I generally like it. But I do think that for the Western Sydney story, you need population growth, and I don't see population growth ending, but it doesn't have that sort of extra, the scarcity that like some of the other areas have that give you that extra 1% a year. And so I do like Western Sydney. I bought in Pendle Hill and Toongabbie, which I like those areas. And what I'm looking for when we say Western Sydney, I'm still looking for established areas. So I still don't want to necessarily buy green fields, or I don't want to speculate on new areas. I don't like that. I want to buy old things that have proven themselves. But Western Sydney has heaps of that. I mean, there's some great investing out there.
You touched on Blacktown City Council having issues or being really handbrake-like with development. Do you see that changing at some point? I mean, I've heard there could be like state-level laws as well, which override city councils for development.
Such a good point. So I don't really know. I know that if you're looking to, if you're like a mum and dad investor and you want to buy a duplex site, best to avoid that area, just because you can buy a corner block, but you can't buy anything else. And that just makes
I think you couldn't subdivide the duplexes
Correct.
or something.
You
It
can't
has to be
subdivide them.
it's like one on one title, which is a problem when it comes to selling.
But
Really.
Parramatta City Council is a lot better with that. But Blacktown, right? Like say Mount Druitt region, like that's where we started with our investing journey. You can get 1,000 square meter blocks for $1.3, $1.4 million. But if you can't subdivide, like, is it worth getting in while you can? Because it's still cheaper, right?
Yeah,
than rest
it's
of-
still it's just a bigger speculation. I mean, I do expect those laws to change, but I don't know when. I have no inside knowledge there. So
But why are they so stuck?
that's a good question. I don't know.
Is
I
it
don't
just
know.
red tape?
I think it's hard to change things. So I don't know why it was originally written that way, and I imagine it would be problematic to change it. But you're right. The state government might have something to say about that, and I think that could be the get out of jail free card.
Perhaps it's just a lot more land in comparison to the inner city or the eastern suburbs.
Yeah.
But given land is so scarce and expensive in general, what's your take on people buying houses on sub 200 square meter blocks, like say the Marsden Parks and Ponds? Or even Southwest has new areas with really tiny blocks. How are people like living on 200 square meters? What's your take?
Well, I don't like to invest in that, so I wouldn't buy that stuff. A lot of people have made money in those areas, but they're the ones who bought the mega blocks at the beginning and then subdivided it and then sold it. So look, there is something nice about having your own land with no common walls, and I think that's true, and I think you'll get growth out of that stuff. But if I was going to be in a new area on what is presently the outskirts of Sydney, although that changes, I would want to own more land. If I'm going to own 200 square meters, you can almost get that in a townhouse closer in. Yeah,
True. But then no affordability though, right? Like if that's all they can afford,
then go for it, because you have to buy to your budget.
Yeah, if you do want a house and you want more space or your own backyard, and it also comes down to, right, like buying a bigger block of land, you are buying an older property, which may come with maintenance costs. Not all investors want that. They want low maintenance, so they don't have to do as much. I know we spoke about earlier, but there's nothing passive about property. You do need to be involved to a degree in that. But some in our client base, many people ask that we do not want maintenance, so they're happy with a smaller block of land. They don't want to necessarily buy a strata property, so that really leaves them those smaller blocks of land. So what do you do in that instance?
But we are struggling though, right, as well, in terms of what we think makes a great property. Like in the past, even until now, we said, okay, minimum 400 square meter block. But many people just don't have the affordability anymore.
Yeah. Yep. There are lots of, I mean, every budget has a ton of options. So it's one of the things I do with my clients is we do this decision makers quadrant where I say, well, we look at the trade-offs. The trade-offs are price, land size, location, and the condition of the property, right? So out of those 4, I get them to nominate their 2 non-negotiables. So usually it's price. They say, look, we can't go on price. And then it's either like size or location, right? So it's a really interesting way to assess the trade-off. So that would answer that question. Do you want size or do you want proximity to work? And usually people want proximity to work. Not always, but
that's for an owner-occupier, though, right? When it comes to investors, many times they're like, well, we don't really care where the property is, whether it's in Sydney or any other capital city and regional. So our preference is capital city. So if someone had an option to buy a strata property in Sydney, like a Wiley Park unit, versus buying a house in regional with a bit of a block of land, what would you tell them?
So I don't buy regional, but that's not because it's a bad investment. It's just because I don't have the knowledge or expertise. I think with being a Sydney buyer's agent, when I reflect on it, it's like kind of the lazy way, right? Because Sydney is going to perform well pretty much everywhere because of all the demographic things that we've already spoken about. There's population growth everywhere. There are housing shortages pretty much everywhere. So you don't need to be that savvy to do well in Sydney, right? Whereas if you're investing in the regional area, you kind of have to pick the economic drivers. There's a lot more tripwires, a lot more areas where you can get it wrong. The example people always give is investing in a mining town, right? So, but if we, and that's unfair because mines have a finite life, but only because I don't want to have to. I view regional investing as good, except it's close to hotspotting, and because I don't know what regional areas aren't fully priced and why, and because when you buy in a regional area, you're usually buying in you're usually sort of hitching your wagon to 1 or 2 economic drivers like the sheep industry or tourism or something like that. Those economic drivers could go away. When you're in Sydney, what are you? You're connected to banking, retail, mining, hedge funds, all that stuff, and there's this sort of, and it's why it's like it's the least. Sydney has its volatility and it goes up and down, but it doesn't have that big amplitude, right? So yeah.
So we have a lot more industries in Sydney. It's a safer bet in a way because regional in general, you do need to be picky because you could easily get it wrong or get in at the wrong point in the cycle because everyone is buying in that particular location. Because one particular location, we keep hearing about it. I'll say it, Townsville. Like for some reason,
all buyers agents are buying there.
Yeah, all buyers agents.
Not all, except for us.
Many buyers agents are buying there. So we keep hearing about it, even from our finance clients, because we run 2 businesses, and even our finance clients have referred to, what about Townsville and all? We don't have a view of that apart from the fact that like if everyone's buying there and everyone leaves the market, what does it mean later down the track? What happens to prices?
With Townsville, then it's also Gladstone and it's Rockhampton.
There's a few places that we've heard about.
Toowoomba.
That's not our strategy. But if someone was looking to buy, right, like if they could get a block of land versus getting in the city, our view would be, stick to the capital city.
Yes.
If you get priced out, then would you be able to get back in here?
Yeah, that's right. Look, you have to be willing to miss out on stuff. So, for example, Hobart was hot 5 years ago, and I missed it, and I'm cool with that. Yeah. I don't regret not investing in Hobart when it was the capital city, and I'm not interested in finding the next sort of hotspot. I mean, I have a view on like where's cheap and where's expensive, but I don't mind if I'm quite happy for people in Townsville to make money and miss out on that.
But are they really making money, John? If it's a group of experts all buying there for their clients, when they leave, what happens then?
Well, then the property languishes for 15 years. What if the military leaves or something like that? I mean, this is what we're talking about, single drivers. It's a big risk.
Data is the big thing now.
Yeah.
Like data, everyone's talking about data. There's obviously many tools available, and when we started our journey, there wasn't much data. We had to manually look at the graphs and see when was the last market peak.
Right.
I think that's another driver which could be misleading people into certain locations. Like, we were chatting earlier about someone said to me, well, I want to buy in this suburb with 2,000 population because that's what the data says.
Right.
So I guess given someone's affordability, our view is sticking to capital cities. And if you're able to get in Sydney, you should get in Sydney because you may not be able to get back in down the track, even if it's a strata property. But then it goes to the discussion around buying a strata property versus a block of land. Like if a strata property is all you can afford, what would you say to that person? What would your advice be?
I see in Sydney and Melbourne, there's nothing wrong with investing in strata properties. I think that, there are some capital cities where units are like a fish out of water, and you want to avoid that. Brisbane's becoming okay, but Brisbane to a lesser extent. It's not really an apartment market unless you're in the city. You wouldn't buy an apartment in Adelaide or Hobart or somewhere like that. But Sydney is different. So Sydney is, there's areas of density and so on. I think that buying an apartment is a very solid way to get started in real estate. And as we mentioned on the previous podcast, I'm a big fan of old 3-bedroom walk-ups, three bedrooms, because you're still getting a bit of scarcity, getting a bigger property, but you're also getting something that appeals to upsizers and downsizers. So apartments are fine.
Do they exist, 3-bedders?
They do. They do. Yeah, they do. They're rare, which is why we want them.
Yep.
But
you would have heard many horror stories with strata reports as well. Like, of course, people do make mistakes. Do you have any examples, or what have you seen?
I've seen tons of terrible strata reports, but they're all sort of from the same period. They're sort of built in the last 20 years, or especially in the last 10 years. And it's always water ingress in the balcony. It's almost always water ingress, or that there might be a like a rooftop terrace with a garden that was, and because there was a I think a compliance requirement back in these times where they had to have gardens and greenery, and so they were insufficiently waterproofing these properties and putting these gardens in there, and that was what was creating the problems. But they were not great built anyway. When I think of apartments, I do prefer older apartments, and so they are timeless classics.
Great. So what sort of due diligence would you do for a client, or what would you recommend someone should do when they are going down the strata path?
Well, assuming we've already decided on a location, so when I do due diligence for a client, I'm looking at like the history of the property. So before we get to the strata report, which is quite telling, right? So you want to see that the strata has harmony. You want to see that there's no history of problems, upcoming levies, and all that sort of stuff. Although you should always expect a special levy eventually. But before we get to that, the sort of analysis I do for the client is things like the history of the property. So when was it last purchased? Like, is this property bought and sold regularly? For how much? Pros and cons, and then I always do the sort of cash flow and equity forecasts, heavily caveated, but cash flow forecasts, equity forecasts, suburb performance, demographics, all those sorts of things. So that all goes into the analysis before we get to a strata report. And then when you get to the strata report, when you're reading a strata report, the clue is in how much is the quarterly strata. I mean, if it's $2,500 for a 2-bedroom unit, you've got a problem without having read the strata report, or the saving up for something. So usually, like, the clue is in the strata, but then when you go to read it, I mean, you're looking for all the usual things.
Have you had to terminate deals because of bad strata reports?
Yes. Deals in, I think, Thornley, in those areas. I can't remember the exact block, but deals have been terminated on the basis.
But surely the selling agent probably tried to convince you that it's all fine.
Every time. Every time.
Just like they do with building reports.
Yeah, that's right. And to some degree, they're right. These building reports, particularly building and pest inspections, they catastrophize problems because they're all about legal liability and making sure that they're not on the hook for anything, and so they tend to catastrophize issues. So you got to speak to your building inspector and say, but what do you think? Because they don't necessarily write everything down. But but what you want is a candid building and pest inspector. The strata reports are a bit different because the problem with strata reports is what's not in the document. That's always tricky. Things that come up at strata meetings, but they don't write them down because they don't want them in the records. I mean, these are things that people who own apartments know about, but people who don't.
But like a problematic owner.
And building and pest reports, right? Like in Sydney, particularly the areas you would be targeting, or even in the West as well these days, there's a lot more auctions.
Yep.
So you buy cash unconditional. There's no building and pest report done.
Mm-hmm.
There's only so many reports you can do yourself. What would you do in that instance, or what's your approach there?
For getting, I mean, for a strata report, for a strata property, you'd get a strata report, and then if you wanted, for an abundance of caution, to get a building a pest inspection, that's always a good idea, but not entirely necessary.
But what if you miss out then? Like, do you keep doing it until you find the right one?
As a buyer's agent, I'm looking for sure things. So we wouldn't be going down the path for a property that we were kind of, like if it was pretty close to our absolute limit, probably wouldn't bother. Would find something else.
It's just not worth your time or client's time or the money invested in these reports.
And we're usually right. Like it usually goes over. So if there's something that is, you do the numbers and it's like it's a bit higher.
Or if you know that you are going to buy it, it ticks your boxes and the pricing's right, or you expect the pricing to be well within the budget, then it's worth going down that part.
And that's why people that's why people use buyer's agents. That's why buyer's agents buy properties quickly, because we don't go down the garden path.
We don't go down these cul-de-sacs. We're looking at properties every single day, so you know exactly what you're going to buy and what you're going to discard.
Ooh.
Yeah, that's right.
You're not buying these for cash flow, though, right? You're buying these properties for capital growth. Would that be correct? In the Sydney market, really, capital growth is the play long term.
Look, 50% owner occupiers as well. And almost every investor that comes to me says, look, right now I want to rent it out, but like I might move into it later. So everyone's got an eye to owner occupy. And
going back to the garden part that you referred to, I'm not sure what your experience would be, but we find sometimes, or not sometimes, often clients are like, well, this is the first property you've shown me and I won't buy the first one. And more often than not, it's the first one that's right, because you're looking at properties so frequently every single day. And when you've found the right property, and you might get lucky.
You're 100% right. It happens all the time. That's why you want to take on clients that are frustrated. I mean, generally speaking, that's what happens anyway. But no, you're right. People say, well, I haven't seen that many. I'd like to see some more, and then we can buy it. Because
they want to compare, but you've already compared it to many hundreds and hundreds of properties you've already seen historically.
Yeah, that's right. No, you're 100% right. It's about a process then, isn't it? Like how you manage the client.
And in the current rates environment, every single property costs money to hold. So what would you say to someone like, okay, well, it's going to cost you $1,000, $2,000, whatever that figure is, it's going to be of negative cash flow. So how do you manage that? Because many people are like, well, I don't want it impacting my lifestyle.
Yep.
So what sort of conversations do you have or your clients looking for?
So I am very adamant to stay in my lane on that. So if the bank has said that they can borrow that amount, that's fine by me. So I really don't try to advise on how much money they should spend or what impact it will have on their lifestyle. What I do show them in my cash flow forecast is this will be the shortfall every month based on the factors that we know about and some that we don't, but I'd never tell them.
Oh, but you wouldn't tell them, but you would do the cash flow, right? And you'd inform them of that. But if they explicitly tell you, well, I do not want it costing this much.
Right. Well, that's okay. You tell me the budget and I'll find you a property. But yeah.
There's a lot of marketing in the industry. You're buying property for the long term. You're not buying it for, overnight growth or overnight cash flow. And as a professional, your job is for your clients to buy the right property, not just any property. And in that, you're not guaranteeing any future growth.
Right.
Or necessarily cash flow.
Yeah, I mean, we do. There are a lot of steps before we even start the process. One of which is, understanding the objectives broadly speaking. Cash flow versus capital growth. Not all of them want capital growth. Some want cash flow as well.
But you tell them not to buy in Sydney then?
No. I'll buy wherever they want. But if they want to buy outside of Sydney, I would introduce them to someone else, or I'd say that I can't help them.
But if they say, John, I want to buy in the Lower North Shore and I wanted positive cash flow and I want capital growth,
I would say that doesn't exist in the long run.
Right.
Yeah.
That-
No, we would establish that nice and early. Yeah. But no. I mean, everyone in Sydney, people know what they're getting. I mean, people don't come to me asking for, they were, buying a house in Bellevue Hill that's positive cash flow. That doesn't happen. I mentioned Wiley Park units before. They were after cash flow. That's where we landed. So understanding the objectives early on.
But
I mean,
even that won't be positive, I don't think.
oh well, we're getting nearly 7% on a 2-bedroom unit.
Right. Okay.
Yeah, so it's pretty good.
But
you're
that's
right.
excellent.
Yeah, it was pretty good. We got a
Maybe neutral
price.
cash flow.
Yeah,
Right.
well, it depends on if you calculate it with the principal payment, it would be neutral. But if it's interest only, it would be cash flow positive.
Positive. Even after strata and management.
Yeah.
That's incredible.
Yeah, they're good, but that market's moved a bit, so it's not.
But
Same.
I guess you could buy apartments in Mount Druitt for $350 that you could 10 years ago.
Right.
Yeah.
Right.
The prices haven't gone anywhere, literally. In 10
Right.
years. So I guess that
But
could be
but does
some-
that mean the market is poised for growth if it hasn't gone anywhere for 10
Well, it
years?
means you're buying into weakness. That you can say that with confidence. I mean, will it grow? It's hard to know. I mean, the fundamentals of real estate always prevail over time. Land content grows. Location does most of the.
But if
heavy
you
lift.
can't afford anything else, then you would buy that. You'd buy something.
Yes, yeah,
Get
I
the
would.
leverage.
I mean,
No, but then $350K could have bought you a house in Brisbane in 2015. So if
Right.
you bought an apartment in even
No, but if
in
you're
West
looking
Sydney-
at it today, like in today's market, and that's all you can afford, that's all you could buy and get into the market, would you suggest that person takes action and does that, or keeps $100,000 in the bank account?
I would suggest they take action, and it doesn't need to be in Sydney. There's a market for you somewhere.
I wanted to understand what's your view of overvalued and undervalued markets across Australia. Just your opinion.
Right. So I think broadly speaking, the real estate market in Australia is not expensive, including Sydney. But I think that I do this exercise called the ratio of Sydney house prices to the other capital cities. So, for example, the Sydney to Brisbane ratio, the Sydney to Hobart ratio, the Sydney to Melbourne ratio. And so using Sydney as an anchor, which is a bit unfair because it elevates Sydney to this status that it's the anchor, but it's the biggest city. And we compare where, over long periods of time, say 40 years, what's the Sydney to Brisbane ratio, and you see it going over and under valued. Sydney is less expensive than most of the capital cities. So the two cheapest capital cities in Australia based on the Sydney to capital city ratio are Melbourne and Darwin. But Darwin is really cheap. Like Darwin is like Perth a year ago, Perth 2 years ago, really cheap, as in it's broken out to like an all-time cheap ratio compared to Sydney at least. So Darwin's cheap, Melbourne's cheap. The other capital cities are relatively more expensive than Sydney, but most are actually in balance. So for example, somewhere like Adelaide would be expensive. Brisbane's a little bit expensive compared to Sydney historically, and Perth is a little bit expensive. But what I don't appreciate is how cheap Perth was 2 years ago. That even though it's done like 20% per year over the last couple of years, it's only just come back to the middle of that range. So there's probably some more room in Perth.
Really, you think it's still cheap?
Well, I think in terms of the Sydney to Perth ratio, it's in the middle to slightly expensive compared to Sydney.
So Sydney and Darwin are the cheapest, but then
Melbourne and Darwin.
Melbourne and Darwin compared to even Sydney.
Correct.
But Sydney is still cheap if you compare. With
I think so. We talked last time about when you take currencies into account. There was a silent crash in the Sydney property market last year when the Australian dollar plunged 15%. That means everything plunged 15% that we measure in Australian dollars. So Sydney property became quite cheap based on gold or US dollars.
Yeah, and why would you be buying in Darwin? I don't know. I mean, I personally haven't researched, but why would you? Is there immigration happening there? We don't.
No, so I agree, and so this comes back to sort of the regional versus capital city. Like I mentioned that if Townsville booms, I'm happy to miss that. Like, and I'm sure I'll miss the Darwin story, and I'm fine with that because and one of the main reason is that we're not investing for 3 years. The 3 year where we've identified an arbitrage, and Darwin's going to catch up. I don't mind. Like that's fine.
I think that's become a big thing in the property space.
Yeah.
That people are looking at very short time frames, whereas you need to look at 10, 15, 20 years. You're buying it for the long term. You're not buying it for the gains you're going to have over the next 12 to 18 months. You need to have that asset performing over a long period of time.
Yeah.
I think it's also the driver of wanting to move from one property to the next and the one after that.
Yeah.
Because obviously one property won't necessarily give you the passive income you're after. But again, that's one other discussion, the story around passive income from property. I know a lot of experts do talk about it, but it's not as easy as, it's discussed. It's certainly a vehicle, but at a very... It's certainly a vehicle, property to retire on, but over a very long period of time. It's never overnight.
I think particularly buy and hold investing, which is harder than it sounds, you got to let it marinate for a bit. It's got to, you got to let it sort of stew in inflation. So the rents are going up and the prices are going up, and you got to let that dynamic happen, which is a cumulative dynamic.
And not give up, right? Because things take off. Because I've seen people do that previously.
So true.
Yeah. Well, thank you so much, John, for joining us today.
My pleasure. Thank you for having me.
Thanks for listening. Join us next time for another episode of Property Addicts Australia. If you have any questions or comments or you need help, feel free to reach out to us. Thank you.